Thanks very much, Eric. John Corpina of Meridian Equity Partners is joining me. John, thanks a lot. We are seeing U.S. stocks come off their worst levels of the morning. What is that telling you?
We are. The markets have rebounded real nicely so far. It looks like all the indices have cut their losses in half. Coming into today, we're fortunate that we had yesterday off and the markets were closed. We had time to really look at the news that was coming out in Dubai, digest the information, and see how it was going to affect our markets today. I think as time goes on, we're realizing that yes, the exposure to the debt crisis is important, but how it correlates to our markets here. So we've had this problem with our housing markets from personal lending and personal defaults. We're seeing it from the commercial side over in Dubai. If that comes back this way and we start seeing the commercial defaults on our side here, that is clearly going to affect our markets in a negative fashion. But the market continues to rally and try to stay strong. It shrugs off any type of economic or news information that comes to us, and it continues to trade to levels where we're at. I mean, we're only down 100 points right now, which is pretty positive for today.
But is today an accurate interpretation of what's happening in Dubai, since it's a short session, fewer market participants?
It's a short session, light volume. Light volume means more volatility to the market. So I'm thinking if we had a full day today, we would have had a down market, but maybe not as much because of the liquidity that is usually in the markets is not here today. But coming into next week, we're going to have the whole weekend to continue to think about what happened in Dubai, how we're going to trade accordingly with it. But unemployment number at the end of next week is going to be very important. We continue to look at that as the gauge of how our economy is doing.
Do you think the fundamentals of the U.S. market are strong enough to absorb a situation in Dubai that potentially will get worse?
Not quite yet. I don't think we're seeing the strong fundamentals that we want to see, but we are going to see that in a short period of time, second quarter 2010. But the news that comes out of Dubai, this is information that we know we're going to get at some point. It's just a question of when we were going to start seeing the real effect of it. Our markets continue to trade in a fashion where towards the end of the year, December historically is a strong month. We're going to see if the markets are going to be able to hold on to it. But from a fundamental point of view, I think all fundamentals have gone out the window. It's more of a psychological trading.
You mentioned unemployment. We know unemployment's rising. So within that report, what are you going to be watching in terms of a bullish indicator for stocks?
What I like to look at when you break it down to the micro sense is the reoccurring claims. I think that's very important, and we've seen an uptick in that most recently. That shows us that the unemployed workers who are on the sidelines, are they finding their new jobs? Are they reapplying again? That's going to show us where this market from the unemployment number is, which way it's kind of directing. The levels that we're seeing now, 1983 levels from the Carter administration, I think we're still going to see a little continued pressure on it, but not for much longer. Once we get 2 or 3 straight sessions of baseline there, then we're going to see the whole thing kind of turn around.
Okay, great. Thanks so much for your time on this short holiday trading session. It's also Family Day here at the New York Stock Exchange.